Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alcon, along with Dennis Dick. And we have Christian Tharp on the line. He's a MarketFi maven and author of the 5-Star Stock Watch. Christian, how you doing this morning?
Doing fantastic. How you guys doing?
We're doing pretty good. We're not trying not to stand in front of this wicked rally in the market. Nice pop off the unemployment number. Could you just give us your quick assessments of I guess we could just call this the V bottom market.
Yeah, I tell you, I was just joking with some of my students and members yesterday that look, it's probably the easiest money that you're going to see in your lifetime. The market drops anywhere from 4 to 6%. Mortgage your house and just buy everything. It's just up and away we go again. And the good news is that, if you're tuned into the market and you kind of monitor whether it be the S&P, the Dow, or whatnot, the good news about the last three rallies is the market has sent somewhat of a, I don't want to say perfect signal, but relatively clear signal that, hey, look, I'm turning around again, and so we did that earlier this week. We did in the middle of December. And by that, I don't mean just the act of bottoming. I mean, there came a day where the market said, whoops, let's turn around and go the other direction. And so we'll take these, clear signals as often as we can get them.
And go ahead, Dennis.
I was just going to say, isn't that the exact truth? Is every time this market pulls back 2, 3, 4, 5%, anybody who just closes their eyes and buys it gets rewarded. And that's really been the case for the last 5 years. So you've created this whole new investor trader that just figures every time the market, if you just started trading, let's say 2008, 2009, 2010, right after the financial crisis, and you're looking at this market, you've just been taught basically that every time you buy a pullback, you get rewarded in it. We even saw it with GWPH. You see it on individual issues too. Stock's down 10 points in the pre-market yesterday. It doesn't even open down, and then it ends up rallying another 10. It's like the buy the dippers just continue to be rewarded. And when does that break? Like, when does that mentality break? Because we've taught everybody that so it's kind of almost like self-fulfilling, isn't it, Christian?
Oh, absolutely. Absolutely. I mean, take 2014. If you just simply blindly bought, let's just say, the market, anytime you hit, again, 4 or 5%, you were only wrong twice, and you were right every other time. But something you mentioned there, I think is probably the more important aspect there is, and again, when I'm working with or speaking with members or whatnot, what I mention to them is just don't get complacent. All bull markets end, which isn't to say I think this one's ending or anything. I'm saying they all end. There is always another correction. And so, on one hand, you want to ride this gravy train as long as it's going to take you. I mean, certainly, as long as that 4 or 5%, signal for you keeps working, keep doing it. Keep doing what's working. But what you don't want to do is wake up and find that you kind of just said, well, I'm going to blindly just buy stuff and not protect myself, not get out, and because we're never going to have a correction. Well, of course we are. And, of course, we're going to have another bear market sometime in our life. The one thing I will say, especially going into 2015, as I'm sure you guys can probably imagine, you've probably been asked yourself for forecasts and predictions and all that kind of stuff, which I think are, a relatively challenging thing to do. What I will say is I believe it's February. If this market makes it to February, it becomes the third longest bull market in our history, which isn't to say it can't become the second. It isn't to say it can't become the first, but you just want to be realistic about, your investments, your portfolio, your 401ks when you say to yourself, all bull markets but two have ended before this one. So the tooth is getting kind of long.
Christian, you made a statement there that you get a clear signal that the market turns around, and and that it's okay to enter. Now, if you're referring to Tuesday here, I did have some longer term short on that I did cover, but I didn't get a clear signal to go long that day, and obviously that was the key day. Did you feel that the reversal was that day? Or was it the following day when you just opened up 2 points higher basically and never looked back? What do you look for? You said you get that clear cut signal. What is that for you?
Sure, absolutely. And to answer the immediate question, it was the following day. To be honest with you, I thought we were going a little bit lower too as of Tuesday because the Dow has a pretty good trend line, and I was monitoring the Dow on the downside, the S&P on the upside because of the 3-year channel that the S&P just can't get through. But on the downside, there's a trend line on the Dow that, although we did breach it in October, we had tested it 4 times prior to that and 1 time right smack dab in the middle of December. So when you come back to Tuesday, I actually thought we were going a little bit lower too. But what I was mentioning to, I do a lot of different calls and interviews, and what I said was, look, the best you can do is say, what is the market reaching for? What is the target? Well, at that time, we were only, not even barely 100 points away from that trend line. So my analysis was, well, we'll probably make it to that trend line, or look for a reversal, and so the Wednesday, okay, in other words, the market always reserves the right to change its mind. I wish it was perfect. And so on Wednesday, when we kind of reversed the entire move from the day before, it wasn't as good of a reversal, and I wasn't as confident in that one as I was in the one in the middle of December, which I thought was, just such a clear, hey, buy me type signal. But when I was doing in my Biotech Trader, I do a daily, a morning call, and yesterday morning, I said, look, Wednesday was great. The one thing I'd like to see just to confirm that was a reversal is just simply hit a new high above yesterday. And sure enough, that's kind of all she wrote. And so that's kind of what I was looking at. And I was in the same boat with you on Tuesday, but Wednesday, caused me to change my mind a little bit.
Christian, just talking about the biotechs, they have been hot. We saw Biogen recently trying to make new highs, and actually in the pre-market it was making new highs, and Celgene and Gilead. But some of these smaller biotechs companies have really been taking off here too. What's your thoughts here? Is this sector like long in the tooth as well, or is this just going to continue? Like it seems like every day we get some little biotech stock up 100%.
Yeah, and the irony is you mentioned the 5-star stock watch that I write. I wrote the one on Halo back on Wednesday. And obviously, those of your listeners that looked at Halo, Wednesday made me look like a champ, and then yesterday in addition. But, what I was looking for and what I was watching when I wrote the article was very clear to me was that, look, when these biotechs are popping, typically, at least the ones I follow, it's not like it's, a random type thing. Generally, what's happening is they're pushing through some resistance that they haven't been able to get through, and it's like the floodgates just open up. So Halo, I'm citing this little 10 to 1025 area.
Oh yeah.
And on Wednesday when it popped through, now I had to tell every single emailer that I heard from, no, I didn't think we were jumping 20%. I just thought we would go higher if we broke through. Kite Pharma, did the same thing. It had that 57.5 resistance that it hit 3 different times, and so you look for those kind of markers, and that's what I try to do in anything I do, whether it be an article or a trade service or an interview like this, to say here is a marker that if we pop through that, this biotech is probably going higher in all likelihood. Obviously ruling out the guarantees, but so take a look at like SGMO. That's one that we've got on our radar right now. Sierra Golf Michael Oscar. Okay. This looks like Kite did, where back a few months ago, Kite was stuck in this little triangle. And when it popped up on through that triangle, when Kite did, okay, and the breakout on the triangle was back the first week of December, stock took off. Look where we are now. Well, if you look at SGMO has this same little triangle pattern forming over the last month. This similar little yesterday. If you connect your peak from the middle of December to your very first trading day of January, draw yourself a nice little pretty trend line, nothing fancy. Look at where we stalled yesterday, right at that trend line, So that's what I would encourage your listeners to do with any stock they're watching, not only biotechs, but these biotechs, when they break through these, they tend to just take off. SGMO, look back in the beginning of December. There was a nice little down channel that SGMO was in. When it popped through it the first week of December, look at that. Same thing as Halo, same thing as Kite. You've got to be prepared for those breakouts.
Okay, but with the are you doing it based on the technicals? When you see these technicals, and do you go and see if they have any trials coming up or what's in the pipeline? Or do you find out more times than not that, the technicals kind of precede and then the good news comes out?
I love that question right there because something I've always advocated and encouraged everyone to consider is, are the news and the fundamentals that you're hearing or reading, are they following the price, or is it the other way around? It's easy to say the fundamentals are something of good after it's jumped 40%, but sure would have been nice if somebody would told you that before it jumped, right? So when it comes to everything I do, it's all about the technicals. So, for example, Kite I recommended as a buy once it broke above 57.5. Okay, and this was in the middle of December. We were watching it. That had nothing to do with fundamentals or what was going on with the company or anything. It was a matter of if we break to that level, simply put, for whatever reason you want to slap on that price, the price is telling me it's going higher. Now, that being said, yes, before I ever make a trade myself or encourage my members to do so with Biotech, I encourage them to check two things. One, check and make sure an earnings report's not coming out in front of you. That could whack you the next day. And the second thing you mentioned, check an FDA calendar. Make sure you're not getting ready to be in something. I mean, yeah, it's always great when positive trials cause something to jump X amount, but you know what? We can hit home runs without doing that. Halo, if you just had a buy order above 10.25, you hit a home run, you weren't even trying. So what we'd rather do is take that risk off the downside by being out. So yes, I do that, but the buys that I recommend are not based on those. It's based on we pop through resistance, we should be going higher. Enough said.
Christian, not every breakout works out, though. So on the failed breakouts, how do you limit your risk?
Perfect. If you want to see a failed breakout, look at NLNK. That was one that we traded. Nancy Lima, Nancy Kilo.
Yeah.
Okay. That was one where I loved that $42 resistance. We had hit it almost right on the nose 3 times. And so I was chomping at the bit, talking about it. Can't wait for this breakout. Sure enough, pulled back, broke out, pulled back to 42. We took a small loss. So we protect ourselves with stop losses because, again, we're always dealing in probabilities, not guarantees. Probabilities, we should go higher. Probabilities, if I set a reasonable stop and that stop is hit, probabilities say I'm wrong and we're going lower. So we didn't ride that thing all the way down to the 37s. We were out close to 39. We were out close to about 41. Knowing that, whoops, I guess we were wrong, we'll put it back in the queue and wait for another trade. So we just protect ourselves, and we use stop losses that make sense. Stops that if this price is getting hit, it's not a guarantee again, but in all likelihood, I was just wrong. And so we avoided $3 to $4 in drop right there.
Right, and I guess you're a little bit longer term trader, so you give it a little bit more room than that. But did you kind of have a queasy feeling when it went back to 42? I believe that was on Tuesday. That old resistance kind of comes in again at 42.40. Did you start to think about it then? And also, do you ever try and if you get caught in something like that? And I know you can get in trouble doing this, but did you ever consider a short?
Oh, absolutely. Yeah, we like the shorts just as much as the longs when we get, when we get the opportunities. We want to be cautious with the shorts, and I try to differentiate. These are stocks I'm interested in as a short versus a long, which doesn't mean there aren't opportunities on both, but it's like, you look at AGIO as an example. AGIO has had a nice little, somewhat of a, kind of like a bull little flag it was going in. When it rallied back up to it, could you say, hey, you have a short opportunity at that potential resistance? Sure, but, do I really want to short something that's doing what AGIO has been doing all year? It's close to a 52-week high. Doesn't mean the short trade couldn't work out, but it's not something I would say gives me the best chance for success. So when you go back to NLNK, absolutely. Once we broke out, we waited for a pullback to 42, and we threw our stop loss. Remember, that marker that shows me we should be going higher is the same marker that if it fails, I know it. And that's the benefit of that marker, that key price, is that not only is it great to know, hey, I should be right at this point, but I also have the added benefit of knowing, whoops, I was wrong. So we base our stop loss on that kind of a force shield that should be protecting us. And when that one didn't, of course, we took our small loss, we moved on. And then, of course, yeah, you're absolutely right. You could consider a short.
Let's move away from the biotechs, Christian. What do you think about oil here? We got to ask you because this has obviously been murdered. We've tried to start to form some type of a bottom here in the last week, but do you think the lows just continue? Like, the trend's obviously not your friend in this case. Do you think we break down, take out those lows, or are we in a bottom forming process?
Yes, I actually, that's probably the number one thing I've been asked, even as a biotech specialist. Kind of oil is the number one thing I've been asked lately. The thing about oil, first off, is, again, talking about trend lines. If you look at like a 3-year chart of, light crude, had a pretty nice looking trend line that, although we had a fake out in January of last year, we finally broke it for good when you look at July of this year. So at that point, we figured, this version of the trend, bearing in mind that the peak from the 2008 and 9 recovery was actually in 2013, and the peak in oil was way back in 2008, that we figured here in 2014, right about July when we broke that trend line, oil was telling us we were going lower. And when we came down to $55 a barrel, you'll notice we tried to hold that for about 3 or 4 weeks. And so I posted a long-term chart of oil for my students and members where if you look at something going back the last 30 some odd years, oil, okay, again, talking about light crude, had a pretty nice little trend line. Test number 1 goes back to the late 90s. Test number 2 goes back into the 2002, 2003 area. Test number 3 comes in right after the 2000, the big nasty 2008 drop. And so guess where point number 4 coincided with? $55 a barrel. All right, so my analysis was, look, if we don't get a nice good bounce off this $55 mark and we break that trend line, odds are we are going lower. So we broke 55, we have went lower. My first obvious target is $40 a barrel. That's our peak from way back in the late 70s, early 80s. It's a peak we've kind of gotten a couple times. It's also where we bounced when you look at 2008. Okay, in that general, some people call it the high 30s, low 40s, but generally right around that 40. So I would think we continue to decline until we get somewhere in that range.
Okay, we've been on the line with Christian Tharp. He's a MarketFi maven and author of the 5-Star Stock Watch. You can go to marketfi.com and check out his product. Christian, you covered everything under the sun there. Thank you very much. We appreciate it. Hope to talk to you again soon.
You bet. Thanks for having me, guys. Always love coming in.